Right now, we're seeing the futures. They are in the green, but we're coming off a rough week for the markets. The Fitch downgrade, one of the factors. What are you expecting in this day ahead? Are we going to continue to see the hangover from that Fitch downgrade?
I think what we're seeing is this real interesting balance between short term. So a lot of CEOs on their second quarter conference calls were very concerned about the short term in the economy. But you have a look at what we saw out of the Fed and Michelle Bowman basically talking about some of the positives. The labor market is resilient, and that's a very strong positive because people are keeping their jobs. You've got strength in the housing market as well. And they're the things that we think are going to offset some of those concerns that you're thinking about in terms of the short term. So we think that the positive can overcome the negative.
All right, so really interesting. So you don't see another down day in the markets. You're seeing a rebound from some of the concerns of that Fitch downgrade?
Exactly. I think that the Fitch downgrade, the fact that it was only one that happened, means that we don't think it's going to really derail the positive momentum we see in the market. We've been in the camp for a long period of time that if we have a recession, it will be such a mild recession that we may not even notice it's happened.
All right, very interesting take there. A lot of people changing their recession outlook in recent days. I also want to go to a sector that you're looking at, healthcare. That was actually our mystery chart we showed a minute ago. You're looking at healthcare, but a specific part, healthcare services. Why are you keyed in on that?
So healthcare services are the companies that provide the insurance. So when you go to the doctor and you hand over the card, there's actually an insurer standing behind that. And what we've seen is some of the earnings coming out of those companies in the second quarter were not the beaten raises that you saw from 75% of the S&P. These are some of the companies that missed estimates. One of the good things about that health insurance sector is that you can correct your mistakes in a year because you get to reprice all of your health insurance contracts on a yearly basis. So we think this is a temporary phenomenon, this downturn in earnings.
You don't very often hear a strategist say misses on earnings are actually a good thing and give some opportunities in the year ahead. So give us some specific names. We're all about actionable names for today. Where would you advise people to put money in today?
Well, have a look. You're talking about CVS Health, which obviously brought down guidance. It had negative earnings print, but the stock actually was up on the day. And that's reflecting of the fact that the valuation has priced this all in. They've been calling out these headwinds on the cost, but they've always also have been telling the market that we can handle it and we can price for it. So even though they didn't have such a great day into the print, the stock is cheap, and we like CVS Health as one actionable name that we'd be buying today.
Another name of yours is Humana and also Elevance, two other names that you're looking at right there in the healthcare services space. One other question I want to ask you about. We did see a pullback when it comes to mega cap tech last week. We saw the NASDAQ take a dip. Would you buy into that weakness today?
I think that when you look at it, it's this balance between valuations and obviously earnings. And one of the things that we're encouraged very generally in the entire market is the fact that earnings estimates, particularly for 2025, have gone up 5 to 10% on the back of upgrades due to the CHIPS Act and the IRA.
That sounds like a yes.
It does sound like a yes.
Katrina